Today, I want to take a closer look at my second favorite semiconductor company, AMD, Advanced Micro Devices. On today's episode, I want to break down the episode into two segments. The first part of the episode, I want to take a closer look at the major growth opportunity for AMD. Second, I want to take a closer look at what are some of the weaknesses in AMD's core products that can obviously impact the overall stock value. So let's take a closer look in today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so first, let's just start off with price action. Year to date, AMD is up a nice amount, roughly 29%. In the past year, the stock is up over 83%. So, congratulations to AMD investors who've been holding this company for a long time. Like I mentioned, this is my second biggest position, and we've talked about it numerous times in this episode. Now, for AMD, I believe this is a double-edged sword. So, the biggest growth opportunity for AMD right now is the MI300X accelerator, which is their AI GPU. We can see here from a recent conference event that AMD was on March 5th that the CFO and treasurer of AMD believes that AI, especially data center GPU, will be the largest growth driver for AMD going forward. So right now, there is a lot of both pressure for AMD in the AI accelerator market and a lot of dependency, even though we have just kicked off with NVIDIA's GTC event, where they did announce a huge kind of leap in innovation with their Blackwell processor, their Blackwell architecture. So it's crazy, right? Because this is a market that they expect to grow dramatically in or see a nice growth throughout the upcoming years. But the main competitor in this space is not letting off the gas. So if we take a closer look at valuations right now, AMD's forward PE ratio sitting at 49, very expensive compared to maybe one of its peers, Intel, and then even forward 1 year sitting at 32.7. Before we go any further, I just want to say thank you all for the amazing support we are getting in this channel. We're closing into 40,000 subs. That is insane. So if you haven't and you are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support this channel a little bit more, check out my special offer at fool.com/Jose. Now back to today's episode. So again, if AMD does do well with the MI300X GPU and with the MI300X accelerator, this could be a very cheap valuation as we do expect this to grow over the years. AMD believes that 2024 will be more of a baseline for their data center GPUs, but 2025 is where this company is really going to start growing at it. Unfortunately, we're going to have to see how competition goes in this space and will this tone change in the upcoming quarters. So if you are an AMD investor, one thing that we're going to have to listen through throughout the upcoming quarters is, hey, has there been any shift in maybe demands for their AI GPUs as the competition continues to release new products? So their most bullish and biggest growth opportunity is a double-edged sword, as it has kind of created, in my opinion, a little bit of a valuation bubble if it's not executed correctly. Now, the second portion of today's episode, I wanted to take a closer look at its core products. So, AMD right now is mainly known for its server CPUs, right? And its consumer CPUs. And both those markets, especially, are seeing a huge growth in competition, right? We have Intel, a big competition in both players. And now we're seeing a lot of kind of ARM solutions like Qualcomm come out for the consumer market. In the server side, not only do you have competition from Intel, you have solutions from other private companies, and more importantly, you have competition from big cloud server providers as well as they develop their own chips. Now, some of you might be wondering, hey, Jose, this is similar to the kind of bearish thesis that we're hearing for the GPU market and NVIDIA, and you're not really too worried about the GPU market, so why are you worried about the CPU market? And I'm going to showcase this overall picture, and I do believe pictures paint one picture can paint 1,000 words, or whatever the saying is. But right now, we have heard that the CPU market is seeing a decrease in amount of shipments being used. And the reason being is computation is increasing over time. And here's a perfect example. A few years ago, the core product was Hopper. In Hopper, to kind of generate X amount of computational power, you would need roughly 8,000 GPUs. In theory, you have one CPU for every 8 GPU. So if a 8,000 GPU system was out there, you would need 1,000 CPUs. Now, as computation is getting more efficient and power, we're seeing a decrease in the amount of GPUs. So with the new Blackwell product, for example, this is a GB200, which is using NVIDIA's core ARM-based CPU. But in theory, right, if we take a closer look, this only uses 2,000 GPUs. Now, if this is more to just paint a picture that, hey, as computation grows bigger, the amount of servers in theory decreases. And that's why AMD historically has been seeing a decrease in shipments of CPUs. Now, there has been kind of a switch off with that. While shipments of CPUs have decreased, usually because these CPUs are improving in forms of are improving in forms of cores and performance, the average selling price is increasing. So it's kind of helping offset that decline. Unfortunately, like we saw, now there is a lot of competition. I personally see this new Grace Blackwell 200 system, this super chip, is going to be a huge competition in the AI market, especially for things like training and inferencing. And right now, the way the market is evolving and the way the market is shifting, it seems like AI is everything. Maybe that might shift in the future, but if you're seeing a decrease in units in units a decrease in unit shipments, and you're seeing an increased competition in one of the main sectors that is seeing a huge growth, then that doesn't bode well for the overall CPU server market. So it does seem like Nvidia could come in and start to take some market share in this space. The other thing, like I mentioned, is this is a very competitive market. Intel is releasing new generations of the overall CPU for the x86 market. And if we take a closer look at NVIDIA with their DGX B200, their Intel of choice is Intel's Platinum 8570 processor. And I do have an image here that the 8570 processor is Intel's fifth generation Xeon Scalable processor, which is formerly known as Emerald Rapids. So not only do you have an increased competition here in server CPUs from NVIDIA, you see NVIDIA choosing their x86 CPU of choice to be Intel, and then like we saw, the overall shipment market is also decreasing. So all of these can be kind of a slowdown impacting AMD in the long term of things. We also have private companies here with Ampere. Ampere also has CPUs that are being used for both AI workloads and that can obviously take market share, as there are some cloud server providers that are currently purchasing Ampere CPUs for their overall data center solutions. Outside of that, we are seeing an increased build of consumers, or these cloud server providers build their own CPUs as well. AWS has the Graviton processor. Microsoft recently announced their Cobalt 100, which is another ARM based. And we know that ARM in general licenses a lot of ARM server CPU solutions. So right now we are seeing, like I mentioned, this is their CPU market, which is AMD's core product at the moment, is seeing not only a shrinkage in shipments, but it's also seeing an increased competition all around the map from big players. And it does seem like at the moment the actual performance to some extent is more dependent on accelerators than CPU. So this is going to be a very tricky market. And like I mentioned earlier, a lot of pressure and a lot of the current valuation is going to depend on how well the MI300X does. So we can see valuations forward PE ratio for AMD forward 1 year is sitting at 32.7. So to me, I have talked about in the past where I believe AMD is a great company. I don't think they've done anything wrong, right? It's just the overall shift that we're seeing from traditional servers to now your more accelerated computation that is kind of shifting this push outside of CPUs and more into GPUs. So right now, AMD is focusing a lot on investing in GPU production and increasing their overall software ecosystem and just overall improving their total cost of ownership. But seeing what NVIDIA has announced this past week or so, we're seeing that there's a lot and a lot of competition. So this is something that like I mentioned, AMD is my number two biggest position. So I have to be very, very strict with it and have to make sure, hey, you are my number two position. So I have to make sure everything's going right. So for the next few quarters, I'm probably not going to be purchasing any AMD stock. And I'm going to have to be listening a little bit closer on how their MI300 is ramping up and how that's doing in overall sales. Because at the end of the day, that's what's going to determine the overall stock action for the stock and potentially my overall returns in the long term of things. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.